Today I'm going to tell you about a high-quality dividend growth stock that appears to be cheap right now. I own this stock in my dividend growth portfolio, and I've been building my position since late last year. It's one of the highest quality stocks out there, has a good dividend track record, and it pays a very safe dividend. I'm Dave Van Knapp, and the stock I'm referring to is Lockheed Martin, ticker symbol LMT. Lockheed Martin is my high-quality dividend growth stock of the month for April 2021. And before I get going on it, please let me just ask that if you like this content, please click the thumbs up button, subscribe to the channel, and click the bell so that you get notifications whenever we post a new video. A few words about the company. Lockheed Martin is a global defense and aerospace giant. It serves both U.S. and international customers with defense products and related products, but most of its sales, 74% in 2020, come from the U.S. government, and most of those sales go to the Department of Defense. The rest of Lockheed Martin's sales are international. Lockheed Martin's Quality Snapshot is just a thing of beauty. As you can tell from the dark green color, it gets a maximum score in 4 of the 5 categories that I use. The only exception being the Standard & Poor's credit rating, where it gets the second highest score. I give 5 points for the highest score for each category, so the total points that Lockheed Martin scores is 24 out of 25. I've gone back through my records, and fewer than 30 companies that I've ever scored score as much as 24 points. So Lockheed Martin is in the highest tier of quality companies. Moving along to Lockheed Martin's dividend record, overall I give it a B, which is a very good grade. Its yield at 2.8% is in the mid-range, what I call the mid-range of dividend yields. That range is 2 to 4% for me. It has an 18-year streak of increasing its dividend every year with a 5-year dividend growth rate of 10% a year, which is a fast rate for a stock yielding in the 2% to 3% range. The most recent increase was last December at 8.3%, which is fast. Lockheed Martin has not announced its increase for 2021 yet, but we can expect that to occur this coming December. The dividend growth rate for Lockheed Martin has been declining a little bit the past few years, but I don't consider that a blemish on the record because its overall growth rate is still so fast. Lockheed Martin gets a dividend safety score of 84 out of 100 on the Simply Safe Dividends scale, which puts it in the highest tier of companies, meaning that its dividend is very safe and very unlikely to be cut. Let's move along to valuation. Lockheed Martin is in a dead money phase where its price has been basically flat since the beginning of 2018, so a little over 3 years. It's been flat in the market even though its earnings have been rising steadily and rapidly for the last several years. On this graph, I've highlighted at the bottom the annual increases in earnings starting in 2018 and going through the current time, and the forward earnings that are projected by analysts right now, which drop a little bit but still continue upward. That flat price action in the market combined with the rising earnings has caused Lockheed Martin's price to earnings ratio to contract from about 24 at the beginning of 2018 to just 14.9 now. This table shows how I value Lockheed Martin. Overall, I think the stock is 14% undervalued, which is pretty significant right now because of that flatness that we just saw compared to its rising earnings. The 4 valuation models are listed. I'm not going to walk through each one. The top 2, as you can see, number 1 and number 2, regard the price to earnings ratio, which I talked about. When I get to a bottom line, I get the 14% undervaluation that makes Lockheed Martin very attractive right now as a dividend growth stock. This little table shows my thoughts on Lockheed Martin's pricing. Its recent price is $371 a share. I calculate its fair price at $431 a share. That takes into account that 14% undervaluation that we just talked about. I normally, for a very high quality stock such as Lockheed Martin, say that I could pay 10% more than what I calculate its fair price to be. So I show that there as $475. But the reality of the situation right now is that Lockheed Martin is selling way under its fair value as far as I'm concerned. So there's no need really to even think about the maximum price you would pay. A good time to buy Lockheed Martin is right now. As I said at the beginning, I own Lockheed Martin in my own dividend growth portfolio. I started accumulating it last year and have added to the position since my original purchase. As an accumulator of the stock, the dead money period that we're going through right now is totally fine with me. The stock has stayed at a fair or undervalued rate since I began buying it, and I will be looking to add to it in the future when I do my monthly dividend reinvestments in that portfolio. I'm not the only one that's high on Lockheed Martin right now. What you're looking at is the analyst research summary from E-Trade where my portfolio is. And as you can see, all the analysts out there that E-Trade provides to its account holders have a buy or a moderate buy rating on the stock right now. Okay, everybody, that's a wrap on Lockheed Martin. Put your questions and comments in the area below the video, and I'll engage with you there. And remember to click those buttons. Thanks a lot. Bye.